Hello and good morning, everybody. You're with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Market Session Outlook. Starting with a brief coverage over the US markets, as we usually do. Basically, both the DOW and the NASDAQ are exploring new heights and reaching new records after the dollar is keeping the momentum supported by the CPI reports yesterday. We did see some controversive numbers in the labor market reports, but no severe deviations, and the Fed representatives were rather calm in their speeches yesterday. We are to look at another FOMC member talking out public today, and that would be the event of the day from the calendar. If we are to look at the neighboring economy, the Canadian central bankers will print their CPI reports today, which are with Tier 1 importance, and those will surely influence the Canadian dollar and cause some volatility against its rivals. Moving along to the European markets, we saw red numbers. Red numbers coming out all over the EU calendar events yesterday. With the declines in the manufacturing and services PMI reports. The Swiss were the only EU member to show some surplus in their export and imports, and therefore the trade balance overall. Nevertheless, the German DAX has managed to add some points, and it's sitting in the 9,600 level. Things were not so positive for the French CAC 40 though, and the index deleted around 40 points in yesterday's session after a little bit over 70 points range. Moving ahead to Britain, the UK, where the FTSE 100 index has wiped out the recent gains with almost 20 points in yesterday's trade. The retail sales report showed positive numbers, especially the month-on-month outcome, which was almost tripled than the projected number. Those have managed to add some weight on the sterling, but just for a short while. The calendar will show the borrowing digits from the public sector today for the month of October, and it is expected to be twice lower than the September's reports. Taking a quick look at the Asian markets. The Japanese yen, basically the Bank of Japan monthly economic survey said that producer prices are expected to continue declining for the time being, reflecting movements in international commodity prices, and the year-on-year rate of the increase in consumer prices is likely to be at around the current level for the time being. The Nomura JMMA Purchasing Manager Index for November has declined to 52.1 from previous 52.4. Moving along to China, basically China's shale boom sees significant obstacles due to lack of infrastructure and the limited exploration rights output target cut to a third of its earlier estimate. China's stock rise the most in the week on bets that the cash crunch will ease. Hang Seng 132 pips up and the Nikkei 56 pips up. USD JPY, Aussie, New Zealand versus the dollar are all on a positive move in yesterday's session. A quick look at commodities, starting with the S&P 500 index, which gained a few points. And the daily range was about 20 points yesterday. The uptrend goes on as we speak. Oil, basically the oil prices continue to rise on reports that Libya may favor cutting output to shore up prices at OPEC's meeting on November 27. WTI headed for the first weekly advance since September, as analysts remained divided on whether OPEC will cut production to support prices that are in a bear market. WTI 74.60 was up by $1.60 yesterday. Gold, the price action was as predicted with a positive correction. The troy ounce went up by almost $10. that was all from me from today. Thank you very much for your attention. Cheers. Bye-bye.